Hey guys, Mike here. So another interesting day in the market, and I'm going to get into today like why fintech is acting like it's acting and performing like it is, as well as Tesla and some other stuff like that. But also a lot of data that came out today. Again, a picture is worth 1,000 words, so I'm going to show you that as well. But if you'll allow me here, I do happen to have a platform, and sometimes a subject will come along that when something just doesn't smell right, I at least want to try to make you guys aware of it. And so, hopefully you'll take this with a grain of salt and stuff. But, there's this new movie out called Sound of Freedom. Obviously, I don't know if you've seen it. If you are a parent or plan on becoming a parent, I highly suggest you at least take a look at it or wait till it comes out or something and rent it. It is very disturbing because it goes over child trafficking, which is something we don't talk about. And the truth is, we don't talk about it because we're not told about it, right? I mean, this is something you don't hear it in the mainstream media. And the only time you're hearing about it now is, what's funny is a lot of the mainstream media is having this crazy reaction to this movie. And they're calling it, a hoax and all this stuff is false. And so, of course, me, I'm going, well, that don't sound right. So I start looking into this stuff and it's really disturbing. The numbers are disturbing. The fact that Congress up in Washington obviously isn't taking it serious. And I'll show you exactly what I'm talking about when I say this, because you never hear any of them talking about it either. So you wouldn't think it was like a problem in this country. You think it was just a third world country problem, but oh no, it is not. Not one bit. Okay, and it's right there sitting right on our border as well. But let me show you how serious Congress takes this problem. And we're talking about child trafficking, and one child traffic is too much, right? Or child abuse or whatever you want to call it. But let me show you. This is the Judicial Committee, invited the gentleman who's actually the main character in this movie being portrayed and stuff, and he's a real life character. I've done all my research on him and stuff, and he runs a foundation now trying to free children and stuff. And he's invited to Washington in the beginning of 2019. They invited him. Let me show you how disrespectful the Congress is up there, the senators here, by just, you count the empty chairs.
All right, the hearing will come to order, and this is our second panel. Mr. Ballard, Timothy Ballard is the founder and CEO of Operation Underground Railroad. Mr. Ballard spent over a decade working as special agent for the Department of Homeland Security, where he was assigned to the Internet Crimes Against Children Task Force and deployed as an undercover operative for the U.S. Child Sex Tourism Jump Team. So, Mr. Ballard.
Thank you, Chairman Graham, Ranking Member Feinstein, and members of the committee who hopefully are watching from a remote location somewhere.
That's right. So as you saw, two people, the people in charge of the committee showed up, 20 others did not. Okay, that's disturbing enough. The other thing is, look at how much funding goes into this. This is insane. $90 million is one number I found. That's from 2022. Here you see $87 million in 2021. You come down, you got like chump change right here. But then here's what's crazy. Look at this right here. Since 2001, the U.S., who we love to send money to other countries, right, has only sent $370 million in 23 years to try to help with trafficking for not just children, for adults as well, because it's actually a huge business. I mean, it's like $100-something billion industry now, which is absolutely insane. Let's check out how much we spend on the war on drugs, which we've been doing forever and making hardly any headway. Oh, look at that. This is just from July, this month. $39 billion spent last year on this. And what's crazy is they estimate now that we have spent over $1 trillion. And I have no doubt this is true, by the way. $1 trillion on the war on drugs. And so again, I implore you to do your own research, ask your representatives, your senators, why they don't talk about this. Because after the Jeffrey Epstein case, by the way, when we find out a guy has a whole island where he's doing this kind of stuff and he's rubbing elbows with the richest, most powerful people in this country and maybe some around the world, you would think there would be some kind of talking about it after that, but nothing. So I have my theories as to why this is being done like this, why they're not funding it, because I found out most local law enforcement who has to actually deal with this, they don't even have like an actual detectives that specifically deal with this. Okay, there may be a drug a detective that deals in drugs or gangs, and they're just thrown a case on trafficking when it happens, right? And so something isn't right, right? Something isn't right because the numbers are too high when you include all of trafficking versus just children to see this going on and not getting the kind of attention now. And then the reaction from the media when this movie came out, they're flipping out about it, right? In a negative way. And I'm like, please do your research. Go see the movie if you want to see it. You know, it ain't going to take no skin on my back whether you do or not, but I at least want to make you aware of this subject because, you know, when a subject comes across my desk, when I'm a big researcher, and I'm like going, really? Is this a problem? Where's this been? Like, how come we haven't been talking about this? Like, I want to know. So anyway, now we'll get on to the finance part of it, but I at least wanted to put that out there to you. Let me know your thoughts on that. And so obviously market's moving up right now. I found this chart today, and you know, just to show you how important liquidity is. Like if you're one of those people that's still holding out saying liquidity don't matter, this is when the Fed put out this whole credit facility for the bank and stuff back in March. And just look at the S&P, how it followed it right on up. I mean, look at that. It's almost directly correlated, right? But this is how important liquidity is, especially during multiple expansion. Then you go over here, and of course, what do you see happening? Basically at the same point in time, this is when, remember I told you how much they were shorting these S&P 500 futures, but you can see it's increased. And when you look at this chart right here, you can see in 07, 08 when this happened, you see 2011 when this happened. When it happens, you see the markets move up when you unravel those shorts and stuff, because obviously to unravel shorts, you're buying back stuff, okay? What else we see happening? And understand and pay close attention to this. What I tell you, obviously a lot of things are getting overstretched right now. Been on an enormous rally. And what this is showing you is that the downside protection is getting really expensive. So this is the cost of puts relative to the cost of 10% out of the money calls. And it's at its highest it's been in over a year. And that's what happens when you go on these big moves and the market saying, maybe it's time for a pullback. Okay, don't say it's going to happen, but when you see the insurance getting expensive, that's normally what you see happen. And of course, out of China, second largest economy, more bad economic news for them. They report Q2 GDP at 6.3% year over year, well below the 7.1%. I'm impressed the numbers are actually accurate. They got 6.3, and we can barely scrape 1.5 at this point in time. But again, looking at how short they were on the expectations, this is where you're seeing them say, okay, we need more stimulus. This is what they're talking about and everything. And you'll see how Chinese stocks react to this in just a minute. And guys, before we continue, if you're getting anything out of this, please hit that thumbs up down there. I really appreciate it. And if you like the material here and the videos, think about subscribing. And I can tell you today, right out of the gate, what was not surprising at all, even though we're sitting here with earnings, we're going to go over a lot of those and stuff. It was all about upgrades and everything else. And I'll show you the upgrades. I'll show you the chart. Here's NVIDIA. It gets a big upgrade, 520 from 420 by city. One that didn't get an upgrade today was Tesla. But if you look, what happened to Tesla? Tesla gaps up, so now we leave another gap behind right there. And what happened was it hit that trend line, and a very important trend line, which we need to see broken. This goes all the way back November 2021. You can see 3 rejections right there. This is the first time we've hit it since, was it April of 2022, and immediately we hit it, sold off just like that. Okay, and so keep that in mind. That's a very, very important resistance line right there. Okay, and of course what we also got to keep in mind is this graveyard of gaps we keep leaving behind on the way up. Just since this month, we've left 4 gaps now up here. And of course, we do have earnings coming up this week on the 19th. And when you look at any kind of pattern here when it comes to earnings, like, it's kind of all over the place. You just don't know. I mean, these are the last 8 earnings right here. And you can see the day after, there's really no pattern at all. Some of them are negative, some are positive. 10 days after, you got some huge moves towards the positive side. You can see where the bigger moves are at. So if you're looking to play that, I guess you can do it. But you still got some decent downside moves. But I mean, 39%, 34%, 20%, nothing to sneeze at. And all those are to the upside. And then 30 days after, you can see some huge moves in both directions. I mean, they're just all over the place. Look at that. Positive, negative, positive, negative, negative, positive. And so, it does have to have big moves. So if you're a gambler, it's definitely the one you want to play. Now, if we look at Apple, of course, Morgan Stanley comes out and they say, hey, we're going to go ahead and do an upgrade here on Apple from 190 to 220. And they're saying the reason why is they think India could account for 15% of Apple's revenue growth and 20% of install growth over the next 5 years. And you see Apple, you want to talk about a graveyard full of gaps right here on this step up. It's just stepping up in this channel once again, almost trying to challenge the all-time high once again. And so you got 1, 2, 3, 4, 5, and now 6 gaps left behind since March. And so obviously gaps usually fill. For that many gaps though, I can't remember. I'm trying to think on the Apple chart when I've seen that many gaps in that short amount of time. But it just keeps on marching up. We'll see if it sets a new all-time high. Then you got Credit Suisse. They're coming out upgrading Meta from 277 to 361. Google from 135 to 150. When you look at Meta, another nice day today. It finally moved back up after moving back into this rising wedge right here. You can see basically as soon as it hit that volume node, it stopped, started moving back up into that gap right there. And if we come out on the weekly, I mean, you can see again with the price upgrades where big money is trying to push this. 325 is definitely not out of the cards, and above that you can see probably get a pullback from there, but you can see the all-time highs to the left up there. It isn't that far away, okay? And I mean, they seem to love this when I showed you how the valuation looks, and they're reporting on July 26th next week, okay? Now, fintech companies, you can see, especially Upstart, SoFi, Square I already told you about. Remember, watch that one. But, these are just kicking butt and taking names lately. And when you look at the charts, a lot of them really look identical. When you look at SoFi, what you're going to see is this long, drawn-out base right here, where it just traded sideways, up and down, finally broke out of that base, trying to get past that volume node right there. But they're all the same as far as like how they moved up really fast and how they moved down really fast, okay? And so that's why when they get that volume node, they start moving up rather quickly. And so that's what's going on with SoFi when you look at it. But, again, from that like 670 to around $9, I mean, you got a huge base out for over a year right there. And so if it gets up there, you're talking about 12, 13 to be the first target of this one before it starts really running into resistance that we've seen in the past. And when you go to Square, you see the exact same thing, right? This long drawn out base over a year of this thing. And you can see another one. Big fast move up, big fast move down, okay? And so it's just starting to get up there. And so 90 is an easy target for this one because it's already done it 3 times while it was basing out before. Above that, obviously, you're going to start having resistance. But, I mean, 105, 110 is definitely numbers to look at. But let's see if we can get to 90 first, which would be a really big move. Again, but this is what Fintech's doing. And of course, the one that's making the biggest move of them all is Upstart. Again, this is one of those companies, I don't do any research on this one, so do your own research. It's just a buy now, pay later company. But the move has been absolutely gigantic. I mean, you're talking about a 276% move in a very short amount of time. But don't forget, this stock was a $400 stock. It dropped 97% for crying out loud. Please let us know if you're holding anywhere in that area up there. I'm just curious to see if you average down or not. But you can see that's why it went up so fast from the IPO and down so fast. You see these huge volume gaps and stuff. And, when you look at this thing from the IPO, look at this IPO. I'm going to show you something and why this stock moves so fast like it does compared to the others. Look at this. 1,366% move in less than a year. 307 days from the IPO. I don't know if I've ever seen an IPO like that before. But the reason why this stock moves like this up and down so fast is because it has 70.85 million on its float. Outstanding shares around 82.6, and look at the short, around 38% as of July 1st from what I could find. And so that's why it moves like it does. It moves up fast, then moves down fast. Huge moves. The premiums are unbelievable on the calls, by the way. I was looking at that today. I mean, it's massive. And so is the IV. Now, BABA, obviously it gapped down because why? You had the China news. Most China stocks did. I'll show you in just a minute. But they started to recover, right? Dip buyers ran right on in, started buying up, and I kind of believe it's following this trend line, which started in October from the October low, had 4 bounces off of it now, and so I think obviously, what are you looking at? Since May, you got higher highs, higher lows. Okay, so it's falling its way up here. I don't think it's going to be a smooth ride or anything. So just with China, you just don't know. China stocks to me are the hardest to figure out because there's just always so much negative news coming out of the economy. We know the economy sucks over there. But again, this is just about whether they're going to do stimulus or not. And so that's what we're going to have to find out. And every China stock was red when we opened up this morning. But again, dip buyers came in, which means big money, and started pushing them back up. I mean, BABA was down 2.5%, got down 91 bounce. All of them are red. But dip buyers came flying in. So, I mean, I think because they're expecting stimulus and they believe what the president says, I guess. And so, looking at earnings coming up here, you can see this week, and we got a fair amount of earnings. Next week is the massive, massive wall of earnings. Okay, that's this week right here, and then that's next week, and then the week after is also a big one. But it's next week that's really going to count. That's when a lot of the big boys are going to be reporting and stuff like that. And so again, that's what I'm saying. You're going to see many different swings back and forth. Everybody's wanting to listen to see, is this finally the earnings apocalypse, or does people just keep beating earnings, or more importantly, actually increasing their forecast for the year? That's really the big one that people are listening out for. Now, as far as earnings coming in tomorrow, mostly you're going to look at the banks. You're going to Bank of America and all those big boys, Morgan Stanley, a lot of regional banks in the morning and afternoon. All right, so you could see, obviously, if you start seeing a lot of good earnings, you're going to see regional banks rally, and then if the regional banks rally, what else is going to rally? That's when you're going to get a real kick into the IWM, which is also known as the Russell 2000, and that will definitely lift that one up, so just keep that in mind. And then as far as the economic news, retail sales will be right before the market opens, and it's actually projected to go up month over month. You have retail sales year over year. So this is something, are we still spending? That's really the big thing. Are we still running up the credit card? And I don't know what you think, but I tend to think, yeah, we're probably running the credit cards up. Yeah, let me know what you think in the comments. But I think, yeah, we're definitely still spending like it's 1999 for sure. And of course, with the regional banks, like I said, we'll see what comes out tomorrow. And if you happen to look at your phone and see Russell 2000 skyrocketing, well, that's probably why, because they actually get the news they're looking for. But it's really more about the forecast of what they see on the commercial side, because they're the ones that hold 80% of the loans. So just keep that in mind. And then we'll get into the tech stuff, obviously with Tesla and the rest of them, the rest of the week. And you'll still have regional banks reporting and things like that for the rest of the week. But tomorrow, just a boatload of them will come out, and we'll get to find out a whole bunch of stuff. I mean, it was PacWest, I believe, which is the regional bank that sold their whole commercial portfolio, I think. If I'm remembering correct, it was like $3.5 billion or something like that. And so I don't know what that means as far as like earnings going forward for them if you don't have any loans on the books, or if they're still doing that at all. But they just want to get rid of that exposure, and the stock pop when they did it and everything. But still, we'll have to see and everything. Let me know what you think down in the comments. If you're getting involved in it, we'll get more techie type earnings coming in Wednesday and Thursday when we hear from Tesla and some others. So just keep that in mind. But next week is the Mac Daddy of them all. Okay, so just keep that in mind. So appreciate you guys watching. As always, please hit the like button if you got anything out of it. Think about subscribing if you like the content and stuff. And I hope you have a great night, and I'll see you tomorrow.